Are you ready?
Ready.
All right, let's go. Kevin here, Top 1 Financial Advisor and best-selling author. We are here to talk about the stock market. The stock market was closed today, but we've got some very important news and items to discuss, and that's because we got the jobs report. What is the jobs report? It tells us how healthy we are as an economy by gauging how many jobs are we adding or losing in the economy from month to month. So here's what we know. In March of 2023, we added 236,000 jobs. That sounds pretty good, but context is always important. In February, the month prior, we added 326,000 jobs. So 326 down to 236. That rate in which we are increasing jobs and adding jobs to the economy is starting to slow down. In fact, that increase is the lowest rate that we have seen since December of 2020. Things are slowing down, which is what the Fed wanted, which is what the Fed expected. But as bad as that sounds, it's not all bad, at least from a numerical perspective. And that's because the unemployment rate still went down. We were at 3.6% in February, and now we are at 3.5%. 3.5% unemployment is hard to argue with that. Also, and this was from a CNBC article, the unemployment rate for African Americans is at an all-time low at just 5%. It dropped 0.7% from the month prior. So across the board, this is looking pretty good, but obviously we have our eyebrows raised because we're seeing layoffs from a McDonald's, for example. We talk about the tech space all the time. We've seen it from Disney, so we are a little bit concerned. What does the jobs report mean? Yes, we added jobs. That rate is slowing down. This means that people are going to have less options. As an individual, I don't like having less options. Like I told y'all last year, when there were 7 job openings for every 1 person, you could go out and apply, get 3 or 4 job offers, and tell everybody y'all have to bid for my services. And instead of, I don't know, $100,000, somebody else is willing to pay you $120, somebody else says $125, and they all outbid each other and you get paid more. That is a great scenario. However, those cases, as many times as that may have happened in a perfect world last year, those are going to become a lot less prevalent this year. And more people are going to start to stay put. Job hopping is the easiest way to increase your salary. Call it what it is. It's a millennial thing. It's starting to be a Gen Z thing. I'm telling you, you hop jobs every 2 to 3 years, you're going to be all right. However, that does not work when things are starting to slow down. You start to see people stay in one spot, which means that their salary is going to be a lot more flat. That doesn't mean you can't get a raise, but it's going to be a lot more flat, and that's going to slow things down even more. So, what does this all mean is that the Fed's job is working. Increasing interest rates at the pace that they have has worked. Inflation, I said this every other video, is from 9% down to 6%. It will likely continue to fall if things continue on this track. We'll see what else happens this year. And again, jobs are starting to slow down. Now the key here is this. Hopefully we don't get to a point where we're losing jobs. That we don't want to see. We don't want to see an increase in unemployment, even though the Fed has already come out and said that they do expect unemployment to increase. Okay, now that's already out there. They've already said that. So right now it's at 3.5. I don't want to see it go up, but there is a likelihood that it could go higher than that. I don't know. I'm not going to put a number on it, but it's likely to be higher than that. So what I would do if I were you, call this a line of demarcation, meaning this is my baseline. I'm drawing a line here, and I'm really going to start to pay attention to the jobs report as well as unemployment and see how the economy changes. This information is important because the Fed uses this to determine whether or not they're going to raise interest rates and how aggressively they're going to do so. We know that has always had an impact on the stock market. And then we know that the National Bureau of Economic Research, the Bureau of Economists that are supposed to tell us whether or not we're in a recession, they are also paying attention to this data. And it is difficult to say, while we had 2 negative quarters of GDP, we talked about that last year. That's the amount of stuff that we put out. So from basically the first 6 months, because a quarter is 3 months, so 2 quarters together, 6 months of not producing enough stuff, that's the basic definition of a recession. But they also look at unemployment. They also look at how many jobs we're adding. So if I'm an economist and you say, look, inflation is high, but unemployment is historically low, and you still added over 200,000 jobs, right? I probably wouldn't say on paper that it's a recession, which is why they haven't come out and said anything yet. So it is still up in the air, but the job side of things is starting to slow down. So the next thing you need to pay attention to, continue to watch how many jobs are added, if that increases or decreases. Continue to watch whether unemployment moves, and if it moves in the wrong direction in a significant way. Those are the things you want to pay attention to, and that's going to really determine how fast they come out and say what is going on, if anything starts to happen in either case. As an investor, what should you do? You should continue to stay put. Okay, this is not, we've already covered several stocks that might make sense. Tech can still make sense right now. I still would not touch banking at this point in time. No, we haven't heard a whole bunch of headlines, but they don't mean it's safe. Okay, so be careful about that. And we obviously talked about crypto the other day as well. You definitely want to watch that. You definitely want to watch that if you're considering looking at crypto. But in either case, pay attention. This is one of those eyebrow raised moments. And what I think is the most important thing right now is a lot of times when you're not subscribed to this channel, I don't know what you're doing, but if you're not subscribed to this channel, which is free, just throw it out there again. But when you're not subscribed to this channel, a lot of people would kind of jump into things and see a headline on TV, open the investing app, and make an immediate mistake, as opposed to banking all of this knowledge and knowing in advance, or at least being prepared in advance. That's the beauty of doing videos Monday through Friday, and that's the beauty of producing 250 videos a year. It's because as a viewer in your shoes, you knew about inflation a long time ago. You knew about the potential of recession last year. We talked about banks and all that stuff last year and the year before that. So this is one of those things where it's like, hey, look, I'm going to go ahead and prepare. I've got my savings already. We talked about that earlier this week. So I got my savings set. I'm already investing. I know what to invest in. I still got my index funds. I'm avoiding perhaps banks. Perhaps I'm putting a little bit more in tech. And you are already prepared so that should it happen, you don't have to go and Google what should I do now, because you're preparing in March. You were preparing in February. You were preparing really all the way back to July of like last year, and you're ready for whatever may come around the corner. So that is what you need to know about the jobs report. Definitely one of those times that we want to just mark a line and say, look, this is what I'm basing everything else off of the rest of the year to see if this is good or bad, and just track it so you can be really ahead of the curve for what may be around the corner. I'm not hinting in either way. Okay, I'm not hinting in either way because I don't know. But I do know that this time next month, if I notice that it continues to shrink and we only add 200,000 jobs, I'm going to know what to do, right? I'm going to know what to feel, and I'm going to know what the actual situation is, because we've been tracking it. We here have been tracking it for a little bit longer. All right, last thing I'm going to ask you for today, perhaps the last thing I'm going to ask you for today, we are nominated for the Best Financial Influencer of 2023 by MAIA. There's the Money Inclusion Awareness Awards. Now, the link to vote is right down below this video, is like the first link in the description. Now, if you really love me and you love the work that we do here, all you got to do, set a timer for 2 minutes. Okay, set a timer for 2 minutes and vote as many times as you can. There is no limit to how many times you can vote. Just sit there, keep voting, refresh, keep voting, refresh. Because I would love to add to our nice little trophy case here. All right, that is it for me. Other news or updates, remember that I am dropping a new video in Cyber Members Only. That's tonight. It's already recorded, actually. I just need to upload it. And I'll actually be out of town next week. You're still going to get all your videos. Thing is, excuse me, the thing is, I'll likely be wearing this or whatever other sweatshirt or something I can pick up. So those are going to be pre-recorded on very general topics, because I can't predict the future. I can't tell you what's going to happen next week if I'm not here. So there's that. But you will get your videos, you will get your knowledge, and I will be commenting and liking. And if there's something that's new and that's breaking, obviously make sure you check out the Instagram, which is also in the link below, and check out the YouTube Shorts. Those are for short form content. When something crazy happens, I'm here for you to let you know what's going on and to break it down in a way that makes sense. All right, that is it for me. I will talk to y'all on, I guess, Monday. All right.